Hello and welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 31st of March 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So today during the session, we'll be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll be covering top trades of the week, live market commentary, trading ideas for the week ahead. Also, during the course of today's session, we'll be talking in depth about tomorrow's non-farm payroll. We'll provide you a bit with our trading plan, with what we are looking to do as we come into the US session this afternoon, and also as we come into non-farm payrolls tomorrow as well. So we'll keep you abreast of the latest developments and what we're seeing in terms of technical setups as we head into that tomorrow, as well as the fundamentals too. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, including Bloomberg, Reuters, CNBC, Global Banking and Finance Review, The Wall Street Journal, to name a few. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.thegoldensilverclub.com. Now we'll take a look at the gold price at the moment. We're currently trading at $1,234 per ounce. So we'll take a look at that very shortly on the charts, what we can expect as we head into the US session this afternoon, what we're anticipating as we go into non-farm payrolls tomorrow as well. I'll talk you through the top trades of the week that we've had using the Gold and Silver Club signature trading strategy. So those are as follows. So first of all, we had a lovely breakout trade earlier on this week on the comments of Janet Yellen from the Federal Reserve, which prompted a breakout to the upside, a 210-point move that we caught for a lovely quick breakout back towards the upper end of the trend channel, which was our profit target zone. And I'll talk you through that very shortly on the charts. We also had a lovely swing trade on soybeans, which we've now banked the profits on prior to the USDA prospective plantings and grain stock report, which will be coming out today at 5 o'clock London time, which we expect that to be a high impact event. And we've also had a lovely trade on sugar, which moved 130 points from our entry on the 17th of March. We've had a lovely swing trade on that. Interestingly, sugar has been one of the best performing commodity markets this year, up 12% on the year to date at the moment. So let me move it over to the chart, guys. I'll go through some of the markets and what we're looking at the moment in terms of commodities. In fact, let me just go through some of the stats with you where we're sat so far with commodities of 2016. So today, being the 31st of March, is the last day of the quarter, and as such you can often see profit taking. We certainly saw some profit taking in a lot of markets. Yesterday we saw liquidation on positions on the grains, on the softs. We also saw a pullback on oil, light sweet crude oil, Brent crude oil, wheat, corn, soybeans. We saw a pullback on sugar, also on silver, gold and platinum. So we've seen this profit taking, which usually occurs at the end of the first quarter for some of the best performing commodities. So if you have a look at how we've performing so far this year, the top 5 performing commodities of 2016 are gold, sugar, silver, soybeans and platinum. Gold so far year to date is up 15%, sugar up 12%, silver up 10%, soybeans up 7.7%, platinum up 7.5%. So it's no surprises that we've seen some profit taking on these markets yesterday, and we've seen some pullbacks again today as well. In terms of some of the worst performing commodities of 2016 so far, natural gas down 26%, cotton down 8.9%, and cocoa down 7.6% year to date at the moment. So the winners of first quarter so far, certainly gold. In fact, you'll be interested to note that gold, it's been gold's strongest quarter since 1986. So it's the strongest first quarter on gold for 30 years. So we've seen some incredible moves to the upside so far in 2016. I want to draw, in fact, we'll go over gold first, and I want to draw your attention to some important observations. Okay, so number one is the monthly chart. And if you have a look at the monthly chart, it's the last day of the month today. So what we can do as we're coming into the last day of the month is that we can assess how the overall price structure is looking on the much higher time frames. And you will note that although we broke out of this major monthly channel that gold has been sitting between major support and resistance for the last 4 years or so, we've finally come up and we broke through that level in the earlier part of March, but we've not had follow through. You can see it looks like we're going to close with an indecision candle, a doji here, where you've got a bit of a battle between the bulls and the bears. What does that mean as we head into April? I would be watching these key zones very carefully. So if we were to breach below the 1206 level, we could start to see more momentum to the downside. And of course, if we can breach above the highs here from March, above the 1282 zone, that could really open us up for the next leg higher here. So some very important levels to look at on the chart here for gold. Indecision on the monthly chart does indicate there is a battle between the bulls and the bears at the moment. Now, in terms of the actual funds and where they're positioned at the moment, I do note the holdings of the world's biggest gold back exchange traded fund, the SPDR gold shares, they declined for the first day in 2 weeks on Tuesday by 3.3 tons. Okay, so that is quite significant. It's the first time in 2 weeks we have seen actual outflows of that trust, and that also coincided with the move that we saw to the downside after the FOMC, the comments from Janet Yellen earlier on in the week. Gold fell more than 1% yesterday as rally on assets seen as higher risk, such as equities, which we'll look at very shortly, prompted some investors to cash in gains sparked by the previous day's Fed Chair Janet Yellen's comments for cautions on further rate hikes. So we saw a breakout to the upside on gold, but that was very short-lived. And we've also continued to see equities rally, right? We've seen the S&P 500, the Dow Jones. Also, we've seen China stock markets continue to build some momentum at the moment. So we'll take a look at that very shortly. So we've seen with that a little bit more weakness in gold here. Now, if you go out to the daily chart, you will note the pattern that we've been monitoring now for a few weeks on our sessions here. Essentially, we are still within this head and shoulder pattern on gold right now. We are at a decision point where if gold can break above resistance, as we come into non-farm payrolls tomorrow, we'll of course be looking out for data to see if it comes out supportive for the US dollar and the US economy or negative. So we'll be looking at that very closely tomorrow. We'll take a look at the US dollar very shortly as well. Essentially what I see lining up at the moment, you've got key overhead resistance at the moment. You've still got this head and shoulders pattern in play here where we've seen the upper end of resistance here got tested again earlier on this week, didn't really follow through. For me, gold really needs to break above 1250 to get us interested in this for a long position, again, for a longer swing trade. We took this breakout on Janet Yellen's comments, came up to our resistance channel and just bank profits at that level, and we've seen the price start to roll over again. So very interested to see how this breaks out over tomorrow's non-farm payroll report. So what are we looking at in terms of the trading plan for gold tomorrow? Well, essentially, I'm taking note of this pennant formation. Now, gold moves really well off its pennant formations, particularly if it produces these prior to news announcements. So I can talk you through the last few pennants that we've had on gold. We had a pennant formation going back to mid-February, which broke out to the upside here, had a good move. We also had another pennant formation, which then developed. You can see that was another pennant formation, which we broke out to the upside, and we broke out to 2016 highs. The latest pennant formation has been developed over the last couple of days here, and if we continue to see a consolidation between yesterday's lows and yesterday's highs, if we form here a inside candle, essentially, if we get one of those, we could be due a nice breakout tomorrow. And that I'll be looking to the US dollar index to see which way this is going to go. The US dollar index has continued its momentum to the downside 5 days now. Well, today looks like to be actually 4 days of consecutive lower lows, lower highs. We came into resistance at the upper end of this trend channel as well. All our indicators have turned bearish, but we're coming back down to a major level of support here where typically the US dollar has snapped back from these levels. So I'm watching this very closely. There are some higher trend channels in place here. There's a number of different levels you can actually put on your charts at the moment. You can also just add out these longer term channels on the chart. You can just try and match up quite a few different levels here. But the main levels which I'm looking at the moment indicate that where we're sat right now with the price structure is a level where the US dollar could get supported. We've got quite a lot of data coming out this afternoon, which I'll go through shortly, which could lend to some support here. It could also lend some weakness to the US dollar. US dollar is getting oversold. Usually it doesn't stay in that territory for too long before it snaps back. We're getting back to a major supportive level tomorrow's non-farm payroll will be very important for the next move here for gold. So essentially, I see a breakout trade on the cards here, either for a breakout of resistance or a breakout below support. But I am keeping in mind where the monthly trend channels are sitting here. I'm keeping in mind that we've got a head and shoulders pattern potentially, which is not fully formed at the moment. Well, it's getting fully formed, but it's not confirmed in a sense that we haven't broken through the neckline, which would indicate then we could really start to head lower here as we progress into April. But we can't take away from the fact that gold has had its strongest quarter in 30 years. That gold so far, there are a lot of strong hands in this market at the moment. So let me just talk you through that in a little bit more detail. I'm going to keep it on the monthly chart here just so you're aware of how we are sat at the moment in terms of the monthly. So if you have a look at the monthly chart at the moment, where we're sat in context of the monthly chart, we are up at a major resistance channel right now. So we've come up to test 1,282 US dollars per ounce on the monthly. You got support at $1,206 an ounce as well over the month of March. So let me just talk you through some of the fundamentals here. So gold fell more than 1% on Wednesday as a rally in assets seen as higher risk, such as equities, prompted some investors to cash in gains sparked by the previous day's Fed Chair Janet Yellen's caution regarding further rate hikes. Okay, so essentially, the comments from the Federal Reserve earlier on this week indicated that they were considering less interest rate hikes this year, so one instead of two. So if that was to go ahead, we would see weakness in the US dollar and of course support for the precious metals, which is what initially happened. So consequent demand for safe havens combined with receding expectations for a US Federal Reserve rate hike drove up gold more than 16% since January so far, making this the strongest quarter so far. So of course we've seen that with gold, it's the strongest quarter since 1986. So very important. Now obviously the markets are awaiting the main US jobs data, which will be released later in the week, which is of course going to be tomorrow. Now I'll talk you through oil very shortly, but I just want to also bring you over to the equities, and we'll just talk you through exactly what has been progressing here. So at the moment, the equities have broken through some major levels of resistance. It's the S&P 500, and interestingly, where we're sat right now, the S&P 500 is currently back at where it started off the year. So we've climbed up to 2016 highs at the moment, which is very interesting. So the whole argument behind buying gold earlier on in the year, which was you can see the breakdown in price here with the S&P 500, the Dow Jones as well. The lows that we formed on equities over mid-February corresponded with the highs that we put in for gold, which was at 1,282 US dollars per ounce. So as we continue to see the price rally here on the S&P 500, it does make the argument for buying gold at the moment slightly weaker. So the fundamentals for the safe haven demand at the moment for gold are weaker right now if we look at the equities. And we're also seeing that very strong correlation continue to play out in Brent crude oil, light sweet crude oil, where we've seen both the equities and oil move in lockstep. But we are getting into a very critical level of resistance where we could start to see equities roll over. It's not really at that point at the moment, but we're looking at this for the inverse correlation. So if we do start to see, if the equities run out of steam here, if we start to see US stock markets roll over here, not really be able to progress much higher, we could see that start to provide some support for gold, for silver, for platinum. But if they continue to rally to the upside, it makes the metals less attractive. So we're definitely bearing that in mind, and we're keeping a very close eye on the equities as we head into tomorrow's non-farm payroll session. So I'll move it over and we'll have a look also at the silver market. So if you have a look at silver currently, we are at a very interesting point here where we've created a higher swing low on the market. We're coming off some important trend lines here. So you can see silver very strongly holding on to a major supportive zone. You've got higher swing lows in the market. Also, you've got support at some major moving averages as well. We're also getting to a bit of a pennant formation here where we're due a decision on non-farm payroll tomorrow. I'm looking to see whether silver can follow through, get above some overhead resistance here and pop back to the upside. Silver, again, it's been the third best performing market so far in 2016. up 10% on the year. So it's been an incredible move on silver too, and we are looking at longer term positions for a buy here on the silver market, but it's to be confirmed in the moment. So I'm looking at a breakout trade, the potential for a breakout trade for the upside tomorrow as well on silver. We'll see how we head, how we fare going into the US session this afternoon as well. If we do see a breakout to the upside prior to non-farm payrolls tomorrow, it is worth noting that gold and silver in previous months so far this year have broken out the day before non-farm payrolls. So we'll be keeping a very close eye on silver in particular to see if it can break out to the upside. And I'll summarize with a bit of a trading plan towards the end of today's session as well. Platinum also gathering momentum from the comments from the Federal Reserve earlier on this week, and we can see we're so far on the day it's looking fairly good. Looks like we could actually have another bull flag formation. So we've had that previously on the chart here, just going back to February, where we pulled back on the chart only to break out higher, and then it looks like we're just getting another potential bull flag formation forming again here on platinum, which could give rise to another breakout. So we're definitely keeping an eye on that possibility, or we'll come into major resistance here and we'll roll over. So we're keeping again a very close eye on tomorrow's non-farm payroll announcement to see which way will break out here on platinum and silver and gold. Now, if we go over to the oil complex, oil, I suspect, is right at a major decision point at the moment. Now, we did see initial breakout to the upside yesterday. We still are creating higher swing lows on the chart. It's been an incredible move so far, 45% to the upside off the lows so far in 2016. It's worth noting also in the oil market that currently the amount of long positions are, especially for hedge funds and money managers, have doubled so the amount of bullish bets have doubled since November 2015. They've increased, and with that we've also seen this significant breakout to the upside in the last few weeks, which we've been long the majority of this move. Currently at the moment on oil we are flat. We're waiting for the next move. We see support here, but we've also got overhead resistance. It's definitely at a decision point here. You can see you've got overhead resistance here on the chart, but you've also got underlying support. Ultimately, if oil can rally off these levels, is at some major supportive zones. If it can consolidate and support these levels, it could start to rotate higher again, and we would be looking for an entry long. But if it breaks down, breaks below its swing lows here, breaks below essentially $39 per barrel, then we could really start to see a rotation lower and a more considerable pullback. So it's interesting to note the crude stockpiles in the United States yesterday, they rose again, reaching a 7-week straight record high. Okay, so that was significant yesterday. So initially we saw a breakout to the upside, but that got sold into. Now today we're sitting around some key support. We're sitting around key moving averages at the moment. So the current price for oil at the moment is really awaiting a resolution. Also on Tuesday, Saudi Arabia and Kuwait, two of OPEC's biggest exporters, said they would resume production at the jointly operated 300,000 barrels per day, even with a meeting on the production freeze. Even if that current meeting, which is due for 17th of April, even with that meeting on the cards, they are still going ahead with their jointly agreed 300,000 barrels per day current production levels. So that is still being resumed. And with that, we saw Brent and US crude falling 3% during that session. So reacted to that news, and we saw certainly a pullback in oil, a pullback in Brent crude oil, a pullback in light sweet crude oil. And so far, the overall price structure, it's looking dependent also on the Baker Hughes tomorrow and non-farm payrolls as we come into tomorrow's session too. So we're definitely at a critical zone right now for oil. So right now we're flat oil. We're awaiting a resolution of this. If we go over and have a look at light sweet crude oil, although we are starting to roll over here on a lot of key moving averages, the overall chart is starting to roll over. It's still got underlying support. So it is important to note where we are sat at the moment in the context of price. We've still got this major consolidation zone, which we could continue just to consolidate on and continue to find support around that zone. Now, in terms of the actual CFTC reports, which came out just on Friday last week. So they represented an increase in longs. So we've we've amassed a near record number of bullish bets on increasing oil prices. Hedge funds have more than doubled their net long position over the course of 2016. So from the end of last year, from November. At the same time, hedge funds and money managers have largely closed out of their previous record short positions in US oil futures and options and started to accumulate those long positions. Also note, again, we are in the last day of the quarter. So today is another day where you could see some more profit taking, balancing of portfolios as we come in towards non-farm payroll tomorrow. The incredible breakout that we've seen to the upside with oil off the lows of 2016. We are seeing some profit taking here as well over the last few days. So that's also worth bearing in mind. The oil price has risen more than 45% since mid-February, ahead of the meeting next month for the world's major producers to discuss the OPEC freeze. Now, that is definitely a date for your diary, okay? So the 17th of April is going to be an important date because that is when the meeting will take place, and that, I suspect, will give us really the next major movement here on oil as well. So we've taken swing trades, the majority of this move to the upside. You could argue here as well, we're starting to form on oil at the moment the beginnings of a head and shoulder pattern with a neckline sitting below 37. So if you have a look, this in particular, if we look at light sweet crude oil, you've got what you could look at as a potential for a head and shoulders pattern and then starting to break down lower. So you've got the neckline sitting at 37.55. I would not just look for a break below that level, I would look for a close below it, because oil is well known for its false breaks. It often has bull traps and bear traps, so I would just be a little bit mindful of that at the moment on oil. Really want to see whether, if we were to get a break lower, if it would close below this major supportive zone sitting at 37. So just keep that in mind. But here's the potential, okay, left shoulder, right shoulder, head in the center, which is sitting around a key moving average, and we could rotate lower there. So keep an eye out on that for oil. Again, we're waiting for a resolution on non-farm payrolls as well to get a larger directional move here on oil too. Moving over now to the grains, if there are any additional questions on the energies or the metals, do put those into the chat and I will go through those with you. Now, it's important to note at the moment where we're sat in context with major news announcements for the grain. So we have the USDA prospective planting and grain stock report, which will be released today. That is coming out of 5 o'clock London time. That is a major mover for the grains markets. Okay, so if you trade any of the agriculture markets in particular, corn, wheat, soybeans, these will be major movers this afternoon. The next 3.5 hours, we will get some big moves on this market. Make sure you protect your trades. You can see at the moment we got some natural profit taking, particularly on wheat yesterday, pull back significantly. Corn yesterday, pull back significantly, and also soybeans. But soybeans is already starting to get a lift to the upside. We have longer term positions on these markets, corn in particular and soybeans, with our trade protected, where we have a risk-free trade running at the moment. If we continue to get a breakout to the upside, we will get a favorable move off that. If we continue to rotate lower, we will simply just come out of those trades at no risk. We've taken a majority of our profits off the table already, and now we have the remainder of our trade is running risk-free. So ultimately, at the moment, we have a trade running on corn and also on soybeans. If we continue to break out to the upside, it will be potentially significant, because soybeans has now breached and cleared above 7-month highs. It's now building a base above a key moving average here, and we're starting to see this nice little consolidation. So if we get a further breakout to the upside, we'll continue to ride that move. Remember, soybeans has been the fourth best performing commodity of 2016 so far, up 7.75% year to date. So it's been a good mover, and we continue to monitor and ride this trade. So definitely keep an eye out for the agricultural markets. If you trade coffee, note that coffee has had a significant move so far this year. If you go back to the coffee move off its lows, which we formed just going back to about mid-February, actually the last week in February, coffee moved up to the high last week. We moved over 21% to the upside. So this move from the lows up to the highs here, it's been very significant. We're getting a healthy correction at the moment. You've got previous resistance, which could potentially turn into support. If you have a look at the major trend channels here, we broke out of a major weekly trend channel. I'm looking for a healthy correction here on coffee, and then an opportunity to get back in this whilst we continue to have fundamentals providing support for this market. So ultimately, coffee, watching this market very carefully for a potential buy opportunity. I suspect we'll get a bit of a resolution this afternoon after the USDA report has come through as well. Okay, so I'm just going to go across and I'll talk you through also a little bit of an update in terms of some of the news announcements which are coming up over the course of today and what we are looking at. Okay, so first of all, we've got the initial jobless claims, which is coming up at 1:30 London time. That's coming up in the next 6 minutes. We've got this afternoon at 2:45 London time, Chicago PMI, and we've got two FOMC members speaking, one at 6 o'clock today and another at 10 o'clock later on this evening, London time. Okay, so bound to get some more volatility this afternoon. Tomorrow's going to be the big one, of course. Non-farm payrolls is at 1:30 London time. We also have as well, we've got the average hourly earnings and we've got the unemployment rate coming out. Of course, the ISM manufacturing employment, Michigan consumer sentiment, and Baker Hughes report coming out tomorrow as well. Now, the non-farm payrolls, the expectation is at 205K at the moment. Okay, so essentially, if we have a big miss on that, if we were to significantly fall under that, we would expect that to be bearish, of course, for the US dollar, and that would provide a potential breakout trade for the precious metals, gold, silver, and platinum. Gold and silver in particular, I'm looking at a potential breakout trade. If the numbers come out stronger than anticipated, we would expect the potential for US dollar to snap back very sharply and a sell-off on the metals. There are also other factors to bear in mind. The average hourly earnings will also be important. Of course, the unemployment rate, we need to factor all of those in to our trade. Right now, I would say in terms of a trade plan today, as we go into non-farm payroll tomorrow, I would be relatively light on positions. We are light on positions at the moment as we go into tomorrow's announcement. If you trade the grains, we've got the USDA report coming out today as well. And note, it is the last day of March today. It's the last day of the first quarter of the year. So we're seeing March madness at the moment. Over the course of this week, we've certainly seen some choppy moves on a lot of the commodities as they work themselves out before the end of the year. Sorry, before the end of the first week of the quarter, but also before non-farm payrolls tomorrow. So you're seeing a lot of balancing of portfolios. So just bear that in mind at the moment. If you're seeing some erratic moves in the markets that you trade, that is something to bear in mind right now. So as we head into tomorrow's session, in terms of a trading plan and what we are looking at right now, in terms of oil right now, we are awaiting the potential for either major support to hold here. So we've come down to pennant formation. We've got some major support here. We're consolidating at that zone. If we consolidate and we find support at this level, and then moving into the Baker Hughes report, which comes out tomorrow at 6 o'clock London time, which has been very supportive so far every single Friday because the US oil rig count is reducing every week. In fact, last year it was down to 7-year lows in terms of the number of oil rigs. If that again supports the price, we could get a breakout to the upside here. So I'll be looking at potential for a long opportunity on oil on a resolution over non-farm payroll and the Baker Hughes report tomorrow. For gold, pennant formation, I'm looking for a breakout trade here, either for a sell short opportunity or a breakout of resistance. That is our trading plan right now. Neutral right now. I'm not looking to have any positions on prior to non-farm payroll tomorrow. I want to see what the data says, and I'll combine a technical setup with fundamentals with the news in order to get a high probability trade. Silver, same situation, building up for a potential good breakout, and also you can see platinum is getting to a resolution here, key area of resistance as well, where we could see a breakout to the upside, or it could rotate and roll over. Also, I would just draw your attention to the higher timeframes on the metals as we move into a fresh month here. So do just keep that in mind where we are sat in the overall context on the much higher timeframes. Gold is forming a doji, an indecision candle for the month of March. And also, if you trade the agricultural markets, bear in mind we have the USDA report, which is coming up later on this afternoon, okay, at 5 o'clock London time, the USDA prospective plantings and grain stock report, which will be released today at 5 o'clock London time. Okay, so we have some major news announcements coming up today. Now, in terms of our technical analysis today, I'll just go through and just double check if there's been any additional questions. We'll certainly go through those. If you would like access to exclusive daily commodities analysis, live trading ideas ready to implement from the Gold and Silver Club, there is an opportunity for you to join the private members live trading room. So as a member of the live trading room, essentially this is what you receive access to. You get exclusive weekly live trading room sessions that you can join. You get live trade setups ready to implement, real-time trade notifications on all of our trades, exact details of where we are entering the trade, our exit placing the stop loss in each of those trades, as well as trade management of all of those positions. Live interactive Q&A via our weekly webinars. You get a week ahead market forecast video and watch list of all the trades that we are looking at for the following week, personalized trading plan tailored to your trading goals, access to ongoing mentoring and support, and institutional level trading research and market insights. You get all of that as being part of the private members live trading room. Essentially, in order to make an application for that, you just need to go across to www.jointhegoldensilverclub.com. Membership is by application only. Once you've completed the application form, a member of our team will get in touch with you ASAP. Okay, so it's www.jointhegoldensilverclub.com. You can also contact us at either our UK, our USA, our Africa, or Asia office. So our contact details for the UK office are 0207 193 0403. Our USA office is +1 646 808 0403. Our Africa office is +27 11 083 8403. And our Asia office is +852 8191 0403. So any questions at all, do feel free to contact us on the following numbers, and I will leave the details here for the application form. It's just www.jointhegoldensilverclub.com. So with that, I hope that gives you a trading plan and shows you the way we're looking to trade this afternoon. And as we head into tomorrow's non-farm payroll, the way the markets are sitting at the moment, I suspect we'll get some explosive moves tomorrow. We should get some explosive moves also on the agriculture markets this afternoon with the USDA report, but tomorrow as we go into non-farm payrolls will really be the big one. So I wish you all good trading. Really look forward to working with those of you who will be joining us at the Gold and Silver Club, and I look forward to see you all on the next session. Okay guys, good trading, and I shall hand back to FX Street. Thank you all very much, and we'll speak to you real soon. Thanks guys, bye bye.